Welcome, dear traders. The fall in stock market and improved sentiment in the Asia-Pacific region were driven by recent statements and supportive auctions from Beijing. Japanese inflation data was also released today. Earlier this week, the country's central bank said that conditions were favorable for a gradual withdrawal of its massive stimulus program. The general message from the Bank of Japan has been that the regulator is preparing to announce the first rate hike but has not yet decided on a date. Today's inflation data seems to have pushed back that date. Japan's key inflation figures unexpectedly fell short of forecasts, and the core consumer price index slowed to 1.6% from a 2.1% year-on-year. That's well below the Bank of Japan's target. Overall inflation in Tokyo also slowed to 1.6% in January from a 2.4% in December. Consumer prices, excluding food and energy, fell to 2.2%, and this compares to 2.7% in December. And this data eases pressure on the country's central bank to raise interest rates soon. In addition, global inflation and energy prices are also falling. Earlier comments from Japanese policymakers and the US economic data helped the yen strengthen and test the resistance of 147.10. However, the dollar-yen pair failed to settle near this level. On a Friday, it moved higher in the range of 147.40 and 147.90. Nevertheless, the prospect of negotiations between the Japanese business lobby and labor unions continues to support the yen. Expected wage increases may stimulate consumer spending and increase demand, driving inflation. As a result, the dollar-yen pair is showing signs of a downward correction in today's Asian session and may head towards the 147.00 and 146.50 bearish zone. The next technical resistance levels are at 148.00 and 148.60. Meanwhile, the US dollar index started the Asian session near the lower boundary of the intraday range of 103.40 and 103.70. It looks like capricious success is on its side for now. At least the greenback's price against its six major counterparts is trading near 103.60 and 103.70. The index is trading near Wednesday's high, and the correction in the US currency took place against the backdrop of a sharp drop in the US Treasury yields. However, before today's release of the inflation report, it's better to refrain from sharp moves in the forex market. However, investors may want to wait and see how the Fed will react to the new data. For example, yesterday's data showed that the country's economy continues to be stable, supporting hopes for a soft landing. That's they left the US regulator free to act, and the US dollar went into correction on the back of this uncertainty. If the inflation data shows a decline, the bearish scenario for the greenback will likely be confirmed. In this connection, the index may be dragged to the support area of 103.40 and 102.00. As for resistance, the first level at 103.75 looks easily accessible. After that, the historical point of 104.26 will be the first mark, where the US dollar has already encountered resistance and potential selling interest. Today, the Australian dollar attempted to extend its recent gains for the second session in a row and managed to climb within the 0.6570 and 0.6590 range. Interestingly, the Aussie was able to do this on the back of a strengthening US dollar. However, the Aussie dollar pair's volatility is expected to decrease later today, as the country's financial markets are closed for the Australia Day holiday. In addition, the 0.66 resistance level acts as a very strong roadblock for bulls, both technically and psychologically. Considering the Aussie-dollar pair's drop at the end of the Asian session, the Aussie may continue its correction, and in this case, its price may fall within the bearish channel to the technical support at a 0.6530 or even lower to the 0.6460 level. If the pair breaks through 0.61, the Aussie may reach the resistance area of 0.6610 and 0.6650. The New Zealand dollar is less confident today, as the Kiwi-dollar pair has not attempted to grow. The Kiwi has breached the 0.61 support level and is now moving deeper into the bearish zone, trading in the range of 0.6090 and 0.6120. The next support and resistance levels are at 0.6150 and 0.6060 respectively. That's all for now. Stay tuned for more updates with the InstaForex TV. We appreciate your feedback. Please leave your questions and comments below and see you online soon.